Good morning, everybody. This is Stephen Richardson from the World Green Building Council. It is exactly 10 o'clock London time, so we're going to make a start now. And I'd like to welcome you all really warmly to this webinar. Thank you for joining. Looking forward to a good discussion this morning about the pilot of energy efficient mortgages that has just launched under the Energy Efficient Mortgages Initiative. Delighted to have three fantastic speakers for you this morning. Obviously, I'll be giving a bit of a brief introduction, talk you through who the Europe Regional Network of World Green Building Council is and why we're involved in this initiative. And then I'll hand over to Jenny Johnson. Delighted to have Jenny on the panel. I'm going to be asking Jenny whether this pilot of energy efficient mortgages is a flash in the pan, as we say in English, or whether it's something that is here to stay. And Jenny hopefully will be talking us through which of the banks are involved and which other institutions are supporting the pilot. Then we'll hand over to Barry from Knauf Insulation. Knauf are a supporter of our network at World GBC and particularly in Europe. And Barry is one of the best placed people I know to answer the question of why mortgages are so powerful in terms of a method of delivering energy efficiency finance. So great to have Barry with us this morning. And then we'll end with a presentation from Rob Cartwright of eTech Solutions in the UK. And Rob will be answering this question of what support banks might need and mortgage lenders might need to make this pilot work, if you like, with a case study of the solutions that they are able to offer. And I think they have some really exciting software that's available, and hopefully that will inspire some other ideas for you in the audience of how your organisations might support or get involved and in the long run benefit from the wider uptake of energy efficient mortgages. And then we're hoping that there'll be plenty of time for Q&A with the panelists. So I'm going to ask the panel to be diligent with their timekeeping and stick to 10 minutes. I'll try and do my best to do the same. On the subject of questions, just to explain how that works, if you want to ask a question, you need to expand your control panel. You do that by clicking the arrow, the orange box there, if it's not already expanded. And you should have a window that looks a little bit like this, with somewhere in there a drop down that says questions. So if you expand that, you can type in your question there. That will come through to me. So you can type those questions in at any point during the webinar. We'll hold them all until the end. And then hopefully we'll have 15, 20 minutes of time where I'll sort of curate those questions and moderate the discussion with the panel. I'm expecting we might not be able to get through all the questions. So I'll just do my best to focus on those themes that seem to be most relevant or most popular. We will do our best. Apologies in advance if your question doesn't get answered. I'm sure there'll be a chance to follow up by email and so forth. So just very briefly, I said at the beginning I work for the World Green Building Council. We're a partner in the EeMAP consortium in the Europe network of World GBC. World GBC is a global community of national green building councils across some 70 countries now. And those green building councils represent around 50,000 members who are themselves organizations and businesses, and in some cases individuals who are passionately driving forward the green building agenda around the world. And they do that in a number of ways through training and education, through building certification, through policy and regulation, and through initiatives looking at finance, which is why EeMAP is so relevant to what we do. In Europe, we have 22 GBCs across the region, and we are supported by 8 regional partners. You can see them listed across the bottom here. And our national GBCs represent around 4,000 members across the region. So in terms of who's involved in EeMAP, 10 of those 22 are formally participating. We're looking forward to expanding that in the near future as some of our other GBCs come on board. But you can see there the ones that are already involved, and the map hopefully sort of gives you an idea of which countries they represent. And in terms of how we, the Europe Network, fit into EeMAP as a project, EeMAP is broadly structured into three main work streams. So there's a banking and finance work stream with a committee that supports that, and that is chaired and led by the European Mortgage Federation. There's an energy efficiency work stream and committee, and obviously that's where we sit, and we lead that work stream, supported by obviously by our GBCs, but also by E.ON, who are one of our regional partners, but also a formal partner in the project. And they led the consumer insight work, which I'll speak about briefly in a moment. And there's a report available on our website if you want to find out more about their work on the consumer research. And then there's a valuation and data work stream, which is led by the RICS, obviously a really respected name in terms of sort of professional standards and valuation and surveying in the property sector. And those three work streams have contributed to developing this pilot, and the framework that we've put together that underpins the pilot reflects the three work streams that you can see there. And we'll talk a little bit more about that in a moment. Just to give you a flavour of what we've done to bring us to this point, we launched this pilot last week. Some of you will have seen the press and the numbers around that. We have 37 banks signed up. Jenny will talk us through that in more detail, but just wanted to give you a sense of the work that's been done to bring us to this point. The project is now just over a year old, and I can speak to the energy efficiency work stream, but what I can say is obviously mirrored across the other work streams. So these numbers just represent one of the work streams that have gone on. So we have 10 green building councils in our working group. We have 9 other organisations on our expert committee. We've in shaping the framework that we've put together, we've hosted 8 national workshops across the region. Through those workshops and through other interviews and surveys, we've consulted with more than 500 experts to get their feedback and their input in terms of the framework that we're proposing for this pilot of energy efficient mortgages. I mentioned briefly the consumer research that was led by E.ON. They ran 6 focus groups in 4 different countries. They then ran 1,500 consumer surveys, more than 1,500 in 3 countries. And also, as part of our workstream, we've published 10 detailed, what we've called market briefings, building performance briefings, looking at the existing, if you like, energy efficiency, energy performance infrastructure in those markets that can support and lead to implementation of this pilot. So a huge amount of work has been done already to get us to this point. And a lot of that has been published in report form. You can get most of that from the World GBC website that's on the page there, or of course from the EeMAP project website, which will flash up on the final slide at the end if you haven't come across that website already. So I'd really encourage you to, if you're interested and want to find out more, do go away and download any of those reports. They're all available for free. But yeah, just wanted to emphasize just how much work has gone into getting us to this point where we have these banks committed to helping us test this framework. And there it is in picture form. It's also, this is the document that will underpin the pilot, which we're asking the banks who've signed up to test and implement and feedback to us on. It's a fairly simple document, actually, and we think that's the right approach, and Jenny will outline a little bit more about that, I think. But there are essentially 3 sections to it that reflect the 3 work streams. There's some guidelines for the mortgage lenders themselves. There's the technical part that determines what buildings will comply and what won't, which is the part that the energy efficiency work stream has led on, and then there's a section on valuation guidelines. at the end. And that document is available as a handout through your control panel. If you want to download it now, you can go into the control panel and access the handouts and download that now, or obviously later. So that's really was all I wanted to say by way of introduction. Without any further delay, I'm going to hand over to Jenny Johnson. As I said, Jenny is from the EMF ECBC, and they are the coordinator of both the EeMAP project and the sister project, which some of you may have heard of, which is called EDAP, and together those two projects in parallel form the Energy Efficient Mortgages Initiative. So Jenny, I'm handing you controls of the slide deck now, and it's over to you.
Thank you, Stephen, and thanks to everybody for being online today to be part of this webinar. We're always really grateful for the opportunity to share the kind of project far and wide. So, I mean, Stephen, you've given a really great introduction, so I don't want to spend too much time kind of on the background, but what I would say is perhaps just a few words to kind of explain how and why we kind of came to this stage, why the banks decided, or why we as a Secretariat of the European Mortgage Federation decided that we should bring our members to this point. So really, it all began about 3 years ago when here in Brussels, you really couldn't leave the office without being aware that energy efficiency was really at the kind of the top of the agenda in Brussels. There were discussions and meetings on the subject everywhere, and over time, a discussion around how energy efficiency or a movement towards a more sustainable economy would be financed was really, these discussions were going on everywhere. And particularly the emphasis was how private investment would need to be focused on energy efficiency of the EU's building stock. We know the kind of impact that the EU's building stock has in terms of energy consumption and CO2 production. And so we kind of came back to the office here and started to have a discussion within the Secretariat, and it became clear to us quite quickly that the banks had the potential to play quite a game-changing role in improving the energy efficiency of the EU's building stock. So we realized that banks, in financing the purchase of buildings, so during the course of their everyday activities, could incentivize borrowers, but either to buy an energy efficient property or to finance the improvement of an existing property to make that property more energy efficient. So we realized that we actually had the potential here to really change the face of energy efficiency and energy efficiency financing. So that was really kind of the starting point. We had that discussion with our members. At the time, 3 years ago, banks had other problems. They had other issues to deal with. And I think that it's fair to say that they weren't necessarily overly enthusiastic when we brought this to them. I remember the executive committee meeting on that occasion very well. But we were really convinced, I think, here within the Secretariat that we were onto something and that this was an opportunity for banks in so many ways that they couldn't miss. So we chipped away slowly but surely, and I think over time banks started to realize that these discussions were also taking place in their own countries. We saw some banks really being kind of pioneers and starting to issue green bonds. There was a lot of drive, I would say, on the kind of the bond side of the business, more so than on the lending side of the business. But to kind of cut a long story short, it became clear over time to our banks as well that there really was something in this. And that was really, I suppose, the moment we decided that we would apply for EU funding under the Horizon 2020 programme to design and deliver this energy efficient mortgage. And that's when we built this consortium that Stephen talked about earlier on, and really the rest is kind of almost history. And that application, which became EeMAP, then led to a second application, which, as Stephen mentioned, is around data collection, analysis, and kind of disclosure capabilities linked to energy efficient mortgages. So that's kind of the background, and that's where we are. I think clearly from a bank perspective, there was a sense that this was the right thing to do, and that this really was the kind of the place to be. At the same time, it was also clear that there was potentially a business case for banks to really kind of become more active in this market. And to kind of explain that, the energy efficient mortgages kind of project rests on two assumptions. The first one is that if you increase the energy efficiency of a property, you are potentially increasing its value, or at the very least protecting against obsolescence over the longer term. And the second assumption is that that an energy efficient borrower has a lower probability of default because they have more disposable income available in the household to service their loan. And if you take those two assumptions together, what that essentially means for a bank is a lower risk. And this has a number of potential kind of positive spillover effects for banks, not least of which is a reduction in the amount of capital the banks have to hold to guard against unexpected losses. So basically, in a nutshell, these loans would be cheaper for banks to hold on their balance sheet, which from a bank perspective is a very significant benefit. So on the one hand, there was a definite sense that this was the right thing to do, that banks had a responsibility and a role to play. But on the other hand, happily, there is also a business case. And it's this business case for banks which effectively drives a broader incentive chain. So if there's a business case for banks, they can kind of pass on this benefit to borrowers in the form of preferential interest rates, so lower interest rates, additional funding at the time of the origination of the mortgage, so more money to carry out the renovation. And this, as you can see on the screen, there's each of the stakeholders or the players in the chain get some benefit out of this. So from our perspective, we really see this as very much as a win-win project or win-win situation. Of course, the challenge for us is to substantiate this link between energy efficiency and loss given default or increased property value and lower risk of default of borrowers. That's something we're going to be working on in the coming months. But perhaps, as Stephen said, I'm really kind of supposed to be talking to you now about the pilot scheme. So perhaps just to kind of give you a sense of where we've come from and where we are and where we're going. Stephen has already explained how much work we've been doing over the last months to prepare the pilot scheme. So we drafted this framework, we put it out there for public consultation. There were GBC workshops. Rick had interviews with valuers, and on the basis of all the feedback we received, we revised the framework and published it officially last week. And last week, during a series of events in the UK, we, as Stephen said, launched the pilot scheme. Now, it's been quite a lot of work to get to this stage, not only in terms of, the preparing and drafting of the framework, etc., but also in terms of persuading the banks to come to the table. So there's one thing actually having these conversations with banks, and it's another thing entirely to get them to kind of commit and sign up to a pilot scheme. But happily, we, as of today, as Stephen said, we have 37 banks on board. These banks come from a wide variety of jurisdictions. So we have representatives from Belgium, Denmark, Germany, Spain, Finland, France, Italy, Netherlands, Portugal, Romania, Sweden, UK, Norway. I hope I haven't left anybody out. But as you can see, these are the banks. They range in terms of size. So we have some the really big names you would recognize, such as ING, Société Générale, Rabobank, and others, right through to some smaller, more specialized lenders. For example, in Germany, Berlin Hyp or Münchner Hypothekenbank. We have a small cooperative bank in Spain, Caja Rural de Navarra, which has been a real pioneer in the Spanish market, issuing green bonds, sustainable bonds. So they're really making a very big change in the Spanish market. So all of these banks are on board. The really, I think, exciting thing from our perspective is that I'm going to try and flick through to the slide, is that these banks together represent almost 50% of the EU mortgage market. If we can persuade some of the larger Italian banks who are still not entirely over the line, if we can persuade them to be on board, then we will be far over 50% of the EU mortgage market, which represents around 25% of EU GDP in terms of scale. So you can see what this means in terms of coverage. So this is really exciting. I mean, I guess 2 months ago, we didn't necessarily think we would be in this particular position. So we're very excited that we have so many banks on board. We also our banks are supported by a number of other organisations, and you see these on your screen now. So a number of the green building councils that Stephen mentioned, but several other organisations who have officially signed up to be part of the pilot scheme. So you see them. Some of these are national banking associations. There are also the European Builders Confederation, the Flemish Confederation of Builders, etc., etc. But also in our orbit, we have a number of other organisations who have been with us since the beginning. CNAF, and Barry, of course, Barry will speak later on. CNAF is one of these, and there are a series of other organisations. So we have created a really vast network of experts who are supporting the project and advising us. I'm conscious of the time, so Stephen, I'm going to wrap it up in a moment. But I think the other really interesting thing to share is that we're not doing this in a vacuum. We are supported and encouraged by a series of European and international institutions who are working very closely with us, following our progress in great detail. So you see these on your screen as well, and these will form an advisory council. And so these institutions will monitor our discussions. They will provide advice. In some cases, it's possible that they can actually provide some kind of technical and even financial support. So that's, I think, a really robust addition to the kind of broader governance structure of the whole initiative. And perhaps just the last word, if I can find the slide. So what are we actually doing now? Where are we? I mean, how are we going to take the pilot scheme to the next step? So we are currently, almost as we speak, preparing an email to the pilot banks and the supporting organisations to prepare the next 3 months. So we have 3 months effectively to look at the guidelines that Stephen talked about, have the banks examine them in subgroups. You can see these on your screen. So we're going to divide the 37 banks up into 7 or 8 subgroups. Those subgroups will be handed the guidelines and asked to identify concerns, challenges, bottlenecks, whatever you want to call them, and propose operational solutions in cooperation with some of the supporting organisations who can provide the necessary expertise. So this work will be carried out over the next 3 months, and the idea is that we all come back together again at the end of September to report back on the findings. And these findings will also be reported back to the European and international institutions, potentially with requests for support according to which criticalities, if you like, have been identified. But the next 3 months are really going to be very important in that respect. So we are working very much in that direction. And I would say, Stephen, I'll perhaps stop now. I could talk about this for hours, but I'm keeping an eye on my clock. But I'll stop now, and I'm happy to take, of course, any questions later on or go into any of these areas in more detail.
Thanks, Jenny. That's fantastic. I really appreciate that. I'm just going to take back controls so I can hand them on to our next speaker. But yeah, I think very clear sense there of just how much, if you like, how much firepower is behind this initiative now in terms of both the banks and the wider network of supporting institutions. So I think a clear signal that energy efficient mortgages are really here to stay for the long term. We're going to go now to Barry Lynham from CNAF, and we're perhaps taking a step backwards in some ways, because I'm asking Barry to give us some thoughts on why are mortgages so useful or so powerful as a tool for financing energy efficiency. So Barry, you should have the controls now, and it's over to you.
Okay, thank you very much, Stephen, and thank you to the GBC also for organizing this discussion. Exactly as you said, I want to give a few thoughts on why I think this is so important as an initiative, and why therefore we decided to support it so far, and why we're excited that the European mortgage industry is doing this. And to do that, I want to take first a small step back and just a look at the challenge that we have ahead in terms of climate change and carbon reduction. And this is just a graph from the International Energy Agency that looks at what it really means to achieve a 2-degree scenario at a global level. And it means pretty much a zero carbon energy system and planet by 2100. But for Europe, it means probably getting very close to that zero carbon economy by 2050. And that is a huge challenge in terms of finance, because the whole sort of the area, particularly around energy efficiency in buildings and dealing with these kind of huge transitions, obviously, particularly a major energy transition, demands a huge amount of finance and to make it happen. When you take a look at the energy efficiency space and ask, what does energy efficiency have to do to help achieve that carbon environment? We look at a 40% of all of that sort of move towards a zero carbon economy is predicted to need to come from energy efficiency. And within that, 80% needs to come from buildings. And that is just, again, a huge financial challenge. And it means scaling up renovations to a level which we've been talking about for 15 years. We've been talking about moving the needle on energy efficiency renovations from 1% to 3% for as long as I've been discussing these issues with policymakers across Europe. And we've pretty much failed to do that. We've stayed at 1%. We've maybe moved a little bit in some countries, but we're certainly nowhere near the 3% that we would need to be to get there. And I think one of the big challenges which is slowing down this activity is finance. Now, when we talk about finance, though, of course, it's really about the right finance and enough finance. And so one of the things that we see a lot at the moment is a lot of people talking about the fact that the economy is awash with finance, that actually there isn't a lack of finance currently, rather there's a lack of projects for finance to fund. We see that also when we were at the event last week in Windsor, that talking to people on the bond and the green bonds, again, green bond people are still looking for projects and looking for places to put the finance which actually exists. But when you look at energy efficiency, particularly energy efficiency in buildings, it's not good enough that you just have finance available. It's good that there's on one end of the back end of the finance. So, at the market level, there's lots of finance that wants to be placed. But you have to have the right kind of conditions to be able to place it into energy efficiency, particularly energy efficiency renovations in buildings. And a couple of the key issues that we've done. So I chaired our internal global financing task force for energy efficiency for 5 years. And in that process, talking to banks and talking to project leaders, one of the things that really came across was that you have these 3 big issues that are kind of the cogs aren't turning in terms of energy efficiency financing. And one is the fact that energy efficiency in buildings often needs long-term financing. And we mean long-term, we mean plus 10 years. So there's a lot of available financing to buy consumer goods, whether that's on your Visa card or with short-term loans. There's lots of financing available for car loans, for example, on a 5-year period. But when you're looking at payback periods of 12, 15 years for energy efficiency measures, you need to be looking at a term of 20 years. And that is something that typically, particularly for unsecured loans, isn't easily available in the market. So the term, the length of the financing that you're looking for is often not there. And that's problematic for energy efficiency, a lot of energy efficiency projects. If you go to things, for example, like LED light bulbs in factories, we know ourselves in our factories, we get paybacks of under 2 years. And we don't need mortgages to finance those kinds of activities. They're very financeable. But when you're doing extensive renovations of buildings, they say you need a longer term. So that's one of the first kind of key issues. The second key issue is interest rate. We know that if you're sort of above 7% interest rates, then you're going to really struggle in terms of making the paybacks work for energy efficiency retrofits that have longer payback periods. So again, the kind of finance that's often available for unsecured financing is often above 7%. So then you're looking at, even though you know that there's some very good data that defaults on energy efficiency loans are very low. They tend to be unsecured loans, and they tend to therefore be difficult to finance at a lower interest rate. And the other thing that makes them difficult over time to finance at a lower interest rate is that when you're trying to finance and drive the price of finance down, you often want to securitize lots of smaller loans into a larger loan facility, which you then can sell to the markets with a proven track record and bring rates down. And they've been trying to do that kind of work in the US, for example, with certain loan groups for energy efficiency. The problem always is that you're trying to aggregate thousands of small loans of 10,000, 20,000 euros into a fund which is big enough, maybe 50 million or higher than 50 million, to then securitize. And that's very difficult. And also you're competing against projects like offshore wind farms, which have much, much higher bills. And one transaction is then possible to have enough resource to work with. Whereas on the energy efficiency and building side, again, with small transactions of 10,000, 15,000, you have to build a lot of those transactions before you can securitize and start bringing down price. So you have this struggle, which is that at the beginning you're struggling to get low interest rates because your track record is poor, and then over time you're struggling because it's hard to securitize these loans. And the final thing comes back which is an aggregation, and it's very hard to aggregate all these loans into one place. And the thing which is so exciting about the mortgage industry is, of course, the mortgage industry has kind of solved these problems. The mortgage industry is very typically offering long-term loans, plus 20 years is a very typical term for mortgages. Mortgages go out to 30 years often these days. So that's a very that kind of term isn't unusual for the mortgage industry. It's actually quite a typical term. Low interest rates are also typical for mortgage rates. I mean, particularly today we're at historical lows in terms of interest rates, but you're certainly well below the 7% mark, which we've seen from the research that we've looked at in the past is kind of critical to get under for energy efficiency loans to start making sense. And so obviously, if you're down around 2.5% or 3%, then that kind of interest rate can really help to make an energy efficiency loan work well and an efficiency project work well. And of course, what banks do incredibly well is they aggregate already as mortgages relatively small amounts. Yes, more like the 300, the 200,000, the 300,000, but that's still a lot smaller than a 250 million project size. And so what excites me about the mortgage industry getting excited by this space and getting interested and getting involved is that they've actually in many ways already solved some of the fundamental issues which we have seen from energy efficiency financing as being critical energy efficiency financing. And so if you can match those two things, if you can bring people who already aggregate these kinds of loans, who already provide this, and you can somehow match those two worlds together, it becomes very exciting because one, they have access to large amounts of finance that can then be brought into this space and help us to really get to that 3%. So that's why I get so excited about the Energy Efficiency Mortgage Initiative, because from the work I've done over the last 5-6 years in terms of what would make sense to really get proper energy efficiency retrofits at the building level working, there's a lot of things which match between the two, what the mortgage industry offers and what energy efficiency needs. And so I think there's a real leverage here to really try to help us to spark that move from 1 to 2 to 3% and get the kind of renovation rates we need to actually deliver on the objectives of delivering the climate change objectives that we have. And in terms of, Stephen also asked, what can we bring to the table, and what do, why are we involved in terms of our expertise? And I think we bring a couple of things which I hope are useful, and I think it's more for the banking industry if it is useful. But one is, as a company, we spend a lot of time on understanding real performance. We call the mind the gap, the performance gap between what we expect renovations to deliver, what they actually deliver. Trying to help banks understand also on the delivery side how difficult it is to get energy efficiency delivered correctly, how much work there needs to be done on training the contractor base, working with different people across the piece to make that happen. And this final piece is where I think we really have also a strong link with GBCs across Europe is on the government incentive side. And one of the things we know is that banks may be able to offer slightly better interest rates for energy efficiency mortgages as if if they can prove that these mortgages are better class of and a better risk class. But that probably won't move the needle enough on this. We probably also need governments to look at things like different taxation of a purchase potentially, or at renovation of properties, energy efficiency, and different activities. I think we've always been really, proud to work with the GBC at the European level, but also in different countries across Europe to work with policymakers to advocate some of these changes, which we think are essential to get us to start moving in the right direction. I think that's also where I think as a company we spend a lot of time trying to explain to policymakers some of these issues, trying to get them to understand how they can structure their incentive schemes to be as beneficial and powerful, and how we could combine those two things. So I'm particularly looking forward over the next couple of years actually to how we can work with the banking industry, but also with GBCs across the piece and with the European GBC Council to see how we can get that voice out there. And so, yeah, I think that's kind of what we're doing. And I think in simple terms, mortgages really just, I think, are the right kind of finance for this kind of problem. And that's what makes me so excited about this initiative and wanting to support it and hoping that with this initiative, we can start to move that renovation cycle up to 2% and up to 3% and start really making efforts to get where we need to be in the building stock across Europe. Thanks, Stephen.
Thanks, Barry. Fantastic. I'm going to just move straight on because we're short on time, but I think we should be fine. I'm going to hand straight on to Rob, and I know Mark is with you, Rob. I think Rob is presenting. Mark will be available to field questions during the Q&A. Just on that point, do send your questions through at this point now. Do put them in the box. I'll be gathering those together, ready for the Q&A later. So please use that facility. Rob, bear with me while I hand you the controls, and then you can take it away. So, Rob, what support might banks need to make this pilot work? There you go.
Thanks, Stephen, and thanks everyone for attending today. As Stephen mentioned, I've got a colleague with me, Mark, who heads up our lending and surveying business. I head up the energy efficiency part of our business. eTech provide mobile solutions for property surveying and workflow management to support energy efficiency and the mortgage market. We've been operating for 11 years in the UK in the energy efficiency space and 6 years around mortgage valuations. And we were acquired earlier this year by CoreLogic, who are a global property information and data provider. So what support might banks need? So obviously I've kind of looked at this from 3 angles, because there are 3 different concepts being floated around energy efficiency mortgages. There's an energy efficient discount, which is a basic slight reduction in the rate based on the energy efficiency of a property. And in the UK, there are already products out there from niche lenders, and I think one of the main lenders has introduced a product recently. A property renovation loan, so that's additional funding to support the improvement of the property. And then the concept of a building energy passport. So once you understand the energy efficiency, what can you do today, and then what can you do going forwards to further improve that property and its energy efficiency? So I'll look at those 3 areas in turn. So energy efficient discounts at first. Obviously, you've got to be able to work out the energy efficiency of the property. So we have mobile apps that support, as I said, mortgage valuations as well as energy efficiency. So here you can see an app where we're capturing all the necessary data to work out the energy efficiency of a property based on the UK government published methodology for calculating the energy performance of a building. So you capture all the data, and you may see in one of the handouts there's an energy efficiency checklist being drawn up under the initiative. All of that checklist, I think, will be very easy to automate from the data that's captured as part of this process. And then you can calculate the energy efficiency of the property which could have a number of influences. It could influence the value placed on the property. So if you combine this with the mortgage valuation, that's a nice, and that does happen in the UK and Scotland. So the mortgage valuation and energy performance certificate surveys are carried out as part of the same visit. It also help inform affordability for a mortgage, and with some regulations in the UK, that's much more important now that lenders have a good audit trail of proving the affordability, and energy bills are becoming a bigger and bigger pull on personal finances. So it's important to be able to validate that data. Obviously, an energy performance certificate may already exist for a property. In the UK, they're valid for 10 years, but a lot could have been done since that was first generated. Properties could have been extended, they could have been improved, and that's not been reflected. So it's important to get an up-to-date view of the property. Now, moving on to property renovation loans. So what you need to be able to do then is say, well, okay, I can improve this property, I can insulate the loft, I can replace the boiler, but what is that going to cost, and what might financing that look like? So again, within our app, we enable surveyors to calculate the install costs of particular measures. So here we're looking at a boiler, for example. They can select a particular boiler, what other additional product variations they may need for that particular boiler in that particular property, and work out an accurate installation cost. When they then know the installation costs, they can work out what finance might look like. So this example here is based on the Green Deal finance mechanism in the UK, which, as Stephen referenced earlier, I think hasn't been that successful. There have been a number of challenges with that. I think the interest rate isn't too attractive. The view on savings is a bit conservative, and the finance has to be covered by the savings. That doesn't necessarily need to be the case if it's a property renovation loan on top of a mortgage, but that's how Green Deal finance works. So there's lessons to be learned there from what's happened in the UK around that initiative. And then the final aspect to look at is a building energy passport. So what might that look like? So we know now what, so we've a back-end system for a company like E.ON, so they can manage the installation of measures, but also they could deliver this through a web platform for a customer, through a web portal, and they do that with our product for booking surveys and selling products. They can update install costs because obviously customers' decisions may change over time as to what they want to do. You can see here that although they've gone ahead with 3 measures, there's a dozen more things that can be done to further improve that property. So that could be delivered through a web portal or a building energy passport. So it's not just what you do now, it's what you can do going forwards to further improve the property, increase its energy efficiency, and maybe be able to get better lending decisions as a result of that. And finally, just turning to another area of the UK market, the buy-to-let market. So about 14% of mortgages in the UK are buy-to-let, so they're purchased to let out, to rent out to tenants. About half of that is to portfolio landlords, and there were some regulations introduced back end of last year which were to control and ensure the financial stability of a landlord's portfolio. So if they have 4 or more properties, the lender needs to do a thorough risk analysis to ensure that that portfolio is stable. Earlier this year, the government in the UK introduced energy efficiency regulations around the rental sector. So new tenancies can no longer be offered on properties with an EPC rating of F or G. So bringing those 2 things together, primarily to support the PRA regulations, we developed a buy-to-let hub product, which now has 10 lenders active in the UK. Part of that, you can see a portfolio here. Down the right, maybe not be able to see it too well, but that's showing the energy efficiency of each of those properties. So it gives the lender a good idea of the risk of that portfolio, but also a potential opportunity for energy efficiency lending to improve F&G rated properties up to the minimum standards that are now required. So as a whistle-stop tour of our solutions and how they may support lenders. Hope that was useful. Stephen, I'll hand back to you. You can field some questions now.
Thank you, Rob. Yeah, that's great. So hopefully that's given you just some examples of the types of the types of support that a lender might look to. We heard from Barry that lenders might want to better understand the issues around the performance gap. Many of you in the energy efficiency sector will understand that very well. So obviously, when banks start to engage with the energy performance of buildings and how that affects their portfolio and their risk profiles and so forth, they will need that sort of technical expertise available to them. And a great example of how that's been delivered through a software tool that eTech have made available on the UK market. Again, hopefully gives you a sense of just the potential tools that are out there, but again also the types of services that mortgage lenders might benefit from. So having providers who can make EPCs available that are good quality at a reasonably low cost, having experts available who can do the assessment of a property and make recommendations in terms of the measures that that would be sensible to implement next. And Rob mentioned at the end there this idea of building energy passports, which is something that we have been looking at and will continue to look at as we go on with the project. So this idea of having a collection of information about the building that goes beyond just the EPC, but also includes information about what has been done to the property already and recommendations of what could be done next, which again might support a lender in terms of and a property owner in terms of understanding what should be done next for a particular building. So thank you to our panelists. Hopefully that's answered some of the questions that some of you will have had as you came to this webinar. We now have time for some Q&A. So I'll be moderating that. This is your chance to put questions in the question box to any of the panelists. So I invite you to do that now. We've had a few come through already. So we'll make a slide of the ones that have come through, and I will keep my eyes on the question box to see what else is coming through. So do continue to post questions if you have them. A first question, I think many people listening may have and came through by email yesterday. Perhaps Jenny, you could speak to this. So we've seen that there are these 37 banks and a real range of countries involved and represented, which is fantastic. But what about those countries that aren't represented, or those banks that aren't part of the pilot yet? Will there be ongoing dialogue? Are you expecting to expand this pool? Is it closed? What's the sort of policy or approach now for banks or countries that aren't yet participating?
Yeah, I mean, it's a really good question. I think the first point would be that, of course, this is an ongoing process, and the group is certainly not closed. So we will welcome, we're still in dialogue with some banks now in certain countries, and that process will continue. I think at the same time, though, what we are doing is we're piloting this product, or we're at least in the first instance doing this kind of feasibility assessment to identify bottlenecks and potential solutions. I think what we do need is a critical mass. We don't need every bank in every country. What we need is a good representation in terms of geography and in terms of, size and business model, which we have. We have a very good geographical coverage, and also we have, as I explained earlier on, a real mix of different size banks in different business models. So I think probably for the sake of what we're doing now, we probably have what we need. But of course, the door is never closed, and it never will be. And we're still hoping that there might be a bit of peer pressure that, in some markets where we don't have all of the banks yet, the fact that their competitors are on board will maybe, spur them to kind of come to the table. And same with countries, really. Once this kind of gets more and more traction and more publicity, we would hope that we would start to see, other countries, coming to the table. So, yeah, a bit of a mixed answer there. But I think the bottom line is that we have the critical mass, I think, for the time being, and that's, really where I suppose we're focusing our efforts for the moment.
Great, thanks, Jenny. And a follow-on question to that, if I may. What about countries beyond the EU? So, do you see potential for this to have, international relevance outside of the EU?
Yeah, absolutely. I mean, through our network, we have members, for example, in Canada, in Brazil, in Singapore, in Australia, and elsewhere. We have had these discussions with banks in Singapore. We had these discussions back in February. There's a lot of traction in Singapore. They're kind of taking a bit of a wait and see approach, whether the kind of work that we're doing at European level is entirely kind of fit for purpose for them at this time. So they're kind of watching closely, but we're going to continue to be in dialogue with them. We've just had an invitation to go to speak to our Canadian member actually in November on this very subject, because we had a first discussion in Vancouver earlier this year. Apparently it sparked a lot of discussion there, and they're keen for us to go there to present the project, to tell them more, to see to what extent they can't replicate. So it's definitely got a global element to it. There's absolutely interest beyond Europe.
Great, thanks, Jenny. A question here, or perhaps a comment for Barry. Somebody is I wouldn't say taking issue with, but just commenting on the way we present and sort of compare the energy efficiency investment with, for example, the investment in a consumer loan that you might use to buy a car or do something else. The point being made that there is no payback on a car. It simply costs you money, whereas an energy efficiency, it might have a long payback, but it does have a payback. So I wonder if you have any sort of response to that. Do you think we need to change our language? Do we need to try and be more positive in the way we portray the benefits of investing in energy efficiency?
Yeah, I think so. Yeah, I think I was trying to explain more the kinds of terms. So I mean, in terms of the length of the lending, and I think rather than the motivations, and of course, I mean, this is for someone who makes an energy efficiency product. Of course, we are often very frustrated by the fact that people happily seem to buy things that are depreciating in value, whereas energy efficiency measures which actually pay themselves back aren't seen as positively as, of course, we would like. So I think I was more describing the fact that the typical term length of energy efficiency lending opportunity is often, particularly when we're talking about significant renovations to buildings, let's say in the 10 to 15 to 20,000 euro kind of range of measures, that the terms that people tend to look for are plus 10 years, and that when you go plus 10 years, the kind of non-secured loans tend to be high interest rate, and so they're hard to match with what the need seems to be. So yeah, I would be very happy if people recognize that more. And maybe Stephen's a good point. I mean, how do we sell the comfort benefits? How do we sell the other benefits of energy efficiency, which would perhaps encourage people to take loan? I mean, I'd almost argue that sometimes the problem is that we do have a payback, and because we do have a payback, people start to look at that payback time as the time that they want the loan to work for. But as I say, I think that's also why we're in a good position in this particular situation with the mortgage industry, because their typical term time does actually fit very well with those kind of energy efficiency retrofits. It also fits very well with the times when people think about retrofits, which is often at remortgage or buying not a new house, but a new house for them, which needs a retrofit. Those moments are often also the time when they're thinking about those things. So I just see this as one way of sparking it. But yes, absolutely, I'm not trying to make a comparison in terms of the quality of why people are taking the money. Just more about the length of terms are usually used for these kind of things.
And maybe Mark in at this point. You obviously your solution is quite interesting because you work across both these spaces of energy efficiency, but value. And you mentioned the example of Scotland, where that assessment is being done sort of in parallel. We've had a couple of questions around issue of the impact of energy efficiency on the value. Do you see that as being something that can valuers are aware of? I mean, the fact that you offer this software platform and it seems to be a success would indicate that there is some appetite to bring those two together. On that, do you think that's a growing trend?
Stephen, thanks for the question. There's a little bit of interference on the line. I think I caught the gist of it. With the world of buy-to-let, most definitely there's an impact on the affordability of a landlord's portfolio when attempting to get new mortgage finance. The buy-to-let investor, the landlord who has more than 4 properties in their portfolio, they're not solely reliant on the current energy efficiency ratings of each of those properties. But if a lender sees that there are some properties that are falling into or are in a delinquent state from an energy rating perspective, that lender may well take a dim view of parts of that portfolio, which could in fact limit that particular investor's potential to secure finance. And arguably, if they were to secure finance, they might be going to a lender that takes a broader view, but would also charge a higher premium for offering that finance to that particular landlord.
Great, thank you for that, Mark. A question on a related topic, perhaps for Jenny. This one. So thinking about the effects that energy efficiency can have on the loan risk, is that something that the regulators, be it the Basel Committee or the Commission, the European Central Bank, these sorts of bodies, is it something that they are recognizing, willing to recognize, is the data available there, to persuade them of that? Do we have hard data that demonstrates that there is really a risk reduction?
Right, yeah. So, I mean, the first point, whether or not we think there's any traction kind of on a regulatory level, certainly when we started this 3 years ago, we recognized that it was, or we at least thought that it was going to be a very difficult case to make because of the lack of data potentially, but also because, as soon as you go to a regulator and talk about reducing capital requirements, it's not a very good kind of narrative to take to the regulator. So we thought that was going to be a difficult thing to sell. Having said that, in the meantime, the European Commission here in Brussels has published a report or its action plan on sustainable finance, and one of the actions is around this very question. So they have committed to examining evidence which could potentially justify a realignment of the capital framework to reflect a reduced risk of green assets. So, I mean, from our point of view, this was a major breakthrough moment. Now, the challenge, of course, is delivering the data to support this. Data does exist to suggest that if you increase the energy efficiency of a property, there is an increase in value. There's been a lot of studies over the last 20 years. And I remember somebody in one meeting saying that of all those studies, only one failed to find this link. So that at least gives some indication that we're onto something. And the same is true also regarding the link between energy efficiency and probability of default. So there was a big study that was carried out in the United States, which showed that energy efficient borrowers have a 33% lower probability of default. And this was even in households who were kind of less financially healthy, let's say. So the indications are out there in the market, but what we really lack is kind of real-time data or really kind of robust data sets, and that's really going to be part of the pilot moving forward. And that's what the other initiative, EDAP, is about. It's about building that data collection and analysis capability so that over the longer term we can make this correlation. What I would say very quickly is that when we started this journey 3 years ago, from a banking perspective, we here at the EeMAP ECBC in the Secretariat thought that this was going to be the only way to bring banks to the table. We thought that the capital discussion would be the game, kind of the deal maker or the deal breaker. As it happens, and this is really good news, over time we've come to realize that it's not actually the only outcome that will keep banks involved in this. There is, of course, the whole "this is the right thing to do" agenda, but there is so much more. It's about greening the bank's portfolio. It's about protecting the portfolio against obsolescence over time. It's about providing the assets to supply the bonds. It's about, in that respect, then giving banks as issuers of bonds a broader investor base. So there are so many other benefits, and not all of these are soft. There are some really hard benefits in this, which is, and so the kind of the capital discussion is only one element of this, but it's certainly not the deal maker, I would say, which is really good news.
Thanks, Jenny. I'm afraid to say we have run out of time, so apologies to those whose questions we've not been able to answer. I do want to sort of respect people's time, and particularly our panelists who are no doubt very busy with their day jobs. So a huge thank you to the four of you for participating today. It's been a great session. I'm sure everybody who's listening in would agree. I've really enjoyed listening to your presentation, so thank you, all of you. And a big thank you to everybody who's registered and signed in and listened live, or if you're listening to the recording later on. Thank you for your interest in our initiative, and the recording will be available on the EeMAP website in the coming days, as well as the presenter slides from the presentations today. The website is there on this final slide if you want to access those. And if you have any questions at all that you'd like to follow up with, then do feel free to send me an email, and we'll do our best to respond to you. So thank you, everybody, and we'll close the webinar there. It's been great to have you with us, and thank you again to our panelists.
Thank you, Stephen.
Bye-bye. Thank you.
Bye-bye.
Thanks. Bye-bye, everybody.